Price can tell you all sorts of things, and you don't even need an indicator to help you spot the obvious. Look, my car and just about every car out there has a gas gauge. Now, the gas tank, being an enclosed solid structure, it doesn't let you see how much gas is left. You need an indicator to show you what is going on, and without it, the chances of running out of gas is about 99%. Now, I left the 1% for those that fill up every time they pass a gas station. Now, price, however, that's an open book. Looking at a plain chart, you can tell how far the market moved, plus the highs and the lows. You can tell by the size and the shape of the candles how much trading was going on and who won that particular battle. Now, the war in trading between bulls and bears, it's ongoing until the end of time or until the end of the market. Now, what you do with that information will either lead you to losing trader status or that coveted money-making trader title. Now, one of the most important things you can learn as a trader is when is it too late to take a trade on the current swing or trend. Now, think of this as showing how much gas is left in the current directions tank. When we take positions, we have two choices, which are either long or short. In a perfect world, we catch the turn and we ride it until the opposing turn and we exit with a massive profit. Now, since most can't do that with any consistency, including me, what else can we do? Well, we can read the signs the market's giving and be on alert for the changes in direction. Now, that by itself, it's not actionable, but it can certainly put you on the side of the realities that the market is showing you. Looking at this chart, we can see a downtrend has occurred. Now, I'm showing you this after the fact, of course, because it's really the only way to explain it, and I really urge you to prove all of this to yourself. The arrows are pointing to swing points, or as some like to call them, pivot highs. Now, the first two arrows are about 8 candles apart, with the second one putting in a lower high. Now, not surprising because at the turns, a quick pullback is pretty normal. We then have 18 candles before we see another pivot high. So this tells me that there was not enough buying interest at any point before now to cause an obvious pivot. As well, not enough shorts are cashing out to form a pivot, meaning the down move is healthy and the bigger money is enjoying the ride. But now we only have 8 candles between the pivots, but we are looking at lower highs, as you can see by the dotted horizontal lines. Not enough buying pressure to have you concerned about being short yet, and then price plummets for 17 candles. So now it gets interesting. These pivot highs, they're only 4 candles apart, which makes this the shortest span between highs. So what else is the price telling us? Look at the size and the shape of the candles. Now, even though we go 8 candles between pivots, the bottom green candle with the wick plus the size of the highlighted green candle, it should be giving you a red flag. Price will then rally for 43 candles. So after reading the above and listening to what I've just said and looking at the chart, where is the last area you would consider shorting on this or a lower time frame? Well, for me, it's after that pivot that only took 4 candles. Now, why? Now, price returned to that level too quick, plus the green candle that brought it up, it's pretty strong in comparison to the prior candle. Now, you could see how price is pretty smooth all the way down, and then it gets pretty sloppy. Now, this is a sign that a bigger battle is going to be fought between the bulls and the bears. Price is hitting an area where traders are finding it to be a pretty cheap place to buy. Now, this sloppy action, it's not a place where you really want to take further shorts. Now, if you tossed up an indicator such as the RSI with the standard settings, you would find this area to be oversold. Now, oversold and overbought can be an indication to some things, but many times the market can stay oversold or overbought for quite a while. So on this chart, the RSI actually went below the 30 line, which is oversold, 5 times before reversing, which may have had you long premature if you use that for signals. Price tells a tale that you don't need an indicator to understand. So do some back testing and see if there are clues before the turns that you can see.